Hello and welcome to this Friday, July 17th edition of Rate Desk. I'm your host, Michael Thomas, here to talk with you about, multifamily interest rates and other news. First, going to the markets, the Dow is lower for the second straight day. The S&P 500 is very close to being at break-even levels for 2020. And the NASDAQ cooled off a little bit. Some of the tech stocks, in particular cloud computing and some others, cooled off a little bit, so the NASDAQ came down a bit. We are seeing an uptick in the U.S. 10-year Treasury yield, just a basis point from yesterday, 0.63, 63 basis points, not a big move there. And we're continuing to see the crude oil futures in the $40 barrel range. Jumping over to the FHA 223F multifamily rates, 242 quoting today. That is a nice shave off of 7 basis points from where we were yesterday. Quoting at the 221D4 at 309. That is fixed for 40 years. Construction permanent loan through HUD, insured by FHA. Jumping over to the agencies, they are flat from where they were yesterday. So at the low end of the range on the Fannie Mae DUS, quoting 278. And over to the Freddie Mac, quoting at 311, 3.11. That is more on the higher end of their range, again, subject to individual loan pricing. What I want to speak with you about today are two things. One, I read an article in Yield Pro about a property achieving LEED Gold certification, and it was talking about human-centric design. It's kind of a newer concept to me. Maybe you all are very familiar with it, but human-centric design kind of is like designing from the user experience. Hopefully all developers are doing this. I mean, we are designing for people, so hopefully we're kind of taking that into consideration. But I think the human-centered design, from what I can read into it, it's going a step further with that. So taking extra measures around a lot of different things, but one in particular jumped out at me regarding indoor contaminants. So organic, inorganic, toxic things in the air, things that have to do with filtration systems, things that frankly, I don't hear a ton about in multifamily. And it reminded me that earlier in the week, I read an article about airlines and their filtration systems, saying that they use the HEPA systems, which are the most robust filtration systems, similar to what hospitals use. And those are really, really good at purifying the air from any kind of airborne bacteria or viruses or things of that nature. Made me think again of what can be done in multifamily design. Are there shared filtration systems? What's the ventilation like? What is the mix of stuff that goes together to put up the bricks and sticks? Are there any things that are produced in that are not ideal from an inhalant perspective or otherwise? Thought it was very interesting. The other aspect of the human-centric approach also reminded me of something else I had read, a startup book called The Lean Startup, written by a tech guy out of Silicon Valley who has this concept of continuing to innovate while you're building your business, but getting constant feedback, being in a feedback loop with users. So to apply that to multifamily, the human-centric design is in continual feedback with folks that would be living or could be living in the apartment itself, and getting real-time feedback on what's important and what's not. I thought that was very interesting as well. A lot of times projects start as an idea, they end up as a plan and a design on paper through the architect process, and then you kind of go from there. Rarely do I hear about this feedback loop with people. Again, I just think it's interesting. Could it be more useful as we evolve in the way that we do business? Could it be more useful in the way that we evolve how we commute or we don't commute? I think that approach, or modifying a version of that approach, could be very useful. So I wanted to bring that up to you today. Last thing I want to mention today, bank stocks were down. The banks have been putting a lot of money aside for loan loss reserves. Okay, with the PPP program, a lot of money went out the door, okay? But banks aren't sure what's going to happen in terms of repayment in this environment. So to be extra cautious, they're throwing a lot of money on the sidelines, keeping their powder dry, which is good. Remember this, bank reserves are not unlimited. While we're in a much better position than we ever were in the Great Recession because of capital requirements being higher and et cetera, they're not infinite. So if a bank is dipping into its reserves, how do you think they're going to feel about new construction loans? Maybe not so much. Just the thought, you might want to consider Plan B options. FHA is one of them with the construction perm loan. Maybe there's others you can investigate with life companies or other private equity sources or private debt funds that you're aware of. But those are things to consider as we move forward into 2021. I just want you to be prepared. So those are things I'm seeing, things I want to keep you updated on. I hope you find that useful, and I'm going to end this week on that note. Thank you for tuning in to another exciting edition of Rate Desk. I am your host, Michael Thomas, signing off.